Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Thursday, the 5th of June 2025. So, as usual, before we jump straight into today's gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the intraday technical outlook on those broad-based cross-asset classes that we cover on a daily basis, i.e. the major dollar pair, the major stock indices, two key commodities markets, which is gold XAU/USD and West Texas crude oil. Let's have a recap what has taken shape yesterday and in today's early Asia session in terms of economic data release, news flow, and as well as the various specific impact on the intraday movement on these cross asset classes. So let's start with yesterday's key data release, which is more centered on the health of the US economy. So let me show my screen so that you guys could have a view of the chart. All right. So yesterday we do have a tier one economic data release. What I mean by tier one? Tier one, that means there is some sign of some element of leading indication where the health of the US economy were to be in the next 3 to 6 months time frame down the road. So ISM services PMI data, which is considered as a tier one data, i.e. why is it tier one? Because it's a soft data which is survey based. So anything that's survey based tends to be sentiment driven, asking the survey respondent how they view various aspects of the US economy, and it's a services PMI data in US. Why services is important? Because the services activity constitute close to 3/4 of US economic growth. And yesterday, the headline ISM services PMI actually dipped slightly into a contractionary mode, which is 49.9. Anything that is below 50 is represent contraction, and consensus is expecting a tepid expansionary of 52, and it came in at 49.9 and also below the prior April month of 51.6. So if you look at the trend of the ISM services PMI over here, marking the first decline in activity since June of last year. All right, so if you look at the 10-year trend, which is a longer term picture, the trend. So after hitting a high of 55.8 in October 2024, the growth rate has been declining steadily in the last 6 to 7 months. And yes, yesterday's data print indicate that for the month of May, activities has starts to dip into a contractionary mode, slightly below 50, which is 49.9, pardon me. So this implies that services activity in the US right now is turning round the corner, not to the upside, but however, unfortunately to the downside. And like I explained earlier, services activity constitute of 3/4 of US GDP growth, and given that this ISM services PMI is a tier one leading indicator, that could be a big risk that the US economic growth may start to slow down in Q3 and Q4 this year due to uncertainty surrounding the erratic way of the current US White House trade tariffs implementation. And also adding a salt to the wound will be the ISM subcomponent services prices. So these ISM services prices, which I explained yesterday in my daily dose, market participants will be watching very closely this subcomponent, is actually indirectly represent the cost of doing business in the services activity or the services sector in the US. So we know that in the last 3 to 4 months, ever since the Trump's Liberation Day trade higher reciprocal trade tariffs, and thereafter we start to see the way the erratic way of the US White House administration try to actually negotiate deals among their respective major trading partners. there could be higher costs of doing business in the US, especially in the services industry. So what you could see over here is that previously there was a forecast of only 65.7 as being calculated by Trading Economics from 65.1 that was printed in the previous month of April. The actual print came in way beyond expectation, which is 68.7. So that actually represent a acceleration of higher costs of doing business in the services industry in the US. That means input prices or the cost of getting a goods done. That means put in a way that very simply is business costs, right? So business cost starts to increase rapidly in the services industry or the services sector in the US. So if you look at the trend over here, all right, so yesterday's 68.7 print in May for the services prices, ISM US ISM services prices rapidly up by 68.7 in May. So that actually is the steepest increase since November 2022. And if you look at the 10-year trend, why is it not showing? Yeah, it's rapidly steeping upwards. So what we could see over here is that previously, you know, that in December 2021, the price actually, there was a deceleration over here. Then what we could see, this is a major bottoming of ISM services prices paid ever since the low of January 2025, which is 60.4. Prices paid or the cost of doing business in the services industry in the US or the services sector as represented by the ISM services prices subcomponent of the ISM services PMI accelerate rapidly to the upside. So i.e. that actually represent an increased risk of stagflationary environment in the US in the next coming months, 3 months to 6 months down the road ahead. So with that, that actually saw a sell-off in the US dollar. So the market actually reacted accordingly. So this is the 5-day rolling performance for US dollar against other major currency. So what we could see over here is that the dollar actually sold off. So if you do the 1-day rolling performance, it's much more obvious. All right. So the dollar actually tumbled yesterday. Over here, it came down. Okay, but you could see over here, this was Thursday. Yeah, this price. Okay, let's put it in the 5-day first. Okay, over here. Okay, so it sell off rapidly. Then after that, during today's Asia session, there was actually a bounce. Then after that, it's tried to inch downwards lower as we are speaking. So if you look at the clear trend of the dollar index over here, let me explain to you guys. Okay, where is the dollar? Yeah. Okay. So if you look at the dollar index, okay, earlier on, there was a gain on Tuesday, and this gain on Tuesday was almost I would say that 50% wipeout by yesterday loss of negative 0.4% on the US dollar index as it continues to print a series of lower high. All right, so today, as we are speaking, there's a marginally rebound, which is only what 0.03%, but nevertheless, it starts to actually see a series of lower high since the medium term swing high that was printed on 12th of May at the key medium term resistance of 101.92, which is the 50-day moving average. And what you could see right now over here is both the 20-day and the 50-day moving average of the US dollar index is sloping downwards. So that indicates that the short and medium term downtrend of the US dollar index is still intact. That means, i.e., potentially US dollar weakness down the road from a technical analysis perspective. And what we could see over here is that very interestingly, gold price also managed to shoot up yesterday as we expected as well. So still recall that in my daily dose yesterday, I suggested that the gold price that was the sell off in the gold price that was seen on Tuesday is more like a minor pullback after this Monday 2.8% strong rally, and that pullback likely to hit a key inflection level from gold, and gold indeed staged a minor rebound yesterday. So if you look at the gold price, so this is what I mean. Okay, this is a daily chart of gold. So what I could see is that initially there was a negative 0.8% pullback on Tuesday, and Wednesday you see a rebound of 0.57%, and the rebound took place right exactly above the psychological 3,300 level. So what are we expecting for gold for today, and what are the key levels to watch? That means on the intraday trend bias for today, I will cover later in the second segment of today's daily dose. And I want to share with you all is that what we could see right now is that yes, we start to see a kind of risk on environment in the equity markets, but it's being not led by US, but it's led by global equities excluding US. So what do I mean by this? So if you look at the ETF, so this is dollar based as well, removing the currency fluctuation. So this ISM ACWI, which is the no ISM, pardon me, the MSCI. Okay, my apologies, but tongue twisting. The MSCI ACWI, that means it's the MSCI, the index compounder. All country world index excluding US ETF. The ticker code is ACWX, which is dollar dominated. That means we remove the currency fluctuation or currency effect. Yesterday, it managed to actually gap up and hit a fresh all-time high. All right, it hit the fresh all-time high yesterday. So if we go to the month on a monthly basis, okay, so very clearly it continues to much higher. All right, so what we could see over here is that the current so-called sell US or South America team play that is being centered on the FX market. Then we start to see the dollar weaken, gold strengthen, and global equities outperform against the US. All right. Yes, yesterday we start to see the US market also a mixed bag on the US market yesterday. So you have the SPX and the Nasdaq 100 managed to close higher, the SPX almost unchanged, 0.01%. The Nasdaq 0.27%, but however, the Dow Jones and the Russell 2000 are in the red, marginally losses. Dow Jones negative 0.22% and the Russell 2000 negative 0.21%. And if you look at the heat map of the S&P 500, very clearly yesterday's movement on the US stock market is still being led by the mega cap technology stocks rather than the other market, which are more in the red than the green. Over here, I could see. Excuse me. Got a bad cough here. Okay, let me go through my chart again. All right, so what I could see over here is that the market leader was the semiconductor within the technology sector, managed to actually outperform the rest of the other industry or other sector in the S&P 500. All right, so what I could see over here is that the Nasdaq continues to actually outperform, but however, the other segment of the other we call it component of the major US stock indices actually lag behind. So that actually explained to us over here is that uh, still considered as a US underperformance in terms of equity perspective against the rest of the world. Okay, so now other team flow or other news flow I'm going to actually explain over here is that I want to share with you in early today's Asia session, we have the release of the Taising Services PMI. So what is this Taising Services PMI is slightly different from the MBS, which is the officially compiled China Services PMI by the Statistical Board of China. Taising Services PMI includes SME, small medium enterprise, whilst the MBS officially compiled services PMI done by the Statistical Bureau of China that only consists of large firms, which is mostly state-backed. So the Taising Services PMI actually grew within expectation, 51.1 from 50.7. All right, so it came in with expectation, and that also saw a rally in the Hang Seng indices as we are speaking right now. Okay, moving in line also with the kind of a sell America team play where the rest of the world global equities is outperforming the US stock market. So the Hang Seng today as we are speaking up by 0.8 2%. The higher beta Hang Seng Tech, which consists of the China big tech stocks name like Tencent, Baidu, Alibaba, SMIC, up by 1.2% over here. And the HSCI, which comprises of the H shares, the China shares listed in Hong Kong, up by 0.84%. So net overall, we start to see the bullish trend of the Hang Seng indices coming remains intact from a short to medium term perspective, which I covered in my daily dose of market insights on a daily basis since last week. Okay, so now another news flow I want to highlight over here will be at this point in time we start to see some form of geopolitical tension pertaining to the Russia-Ukraine issue back again. So at the point in time, Trump actually has a talk with Putin after that Ukraine surprise drone attack on Russian warplanes over here, and Putin vowed to actually respond to the recent Ukraine attacks. So it seems to us that the so-called promising peace talk between Russia and Ukraine is now being kicked down the can again. And given this rise in geopolitical tension or geopolitical premium, that could actually add on to another positive driver for gold prices, at least from a medium-term perspective. All right, so that sum up the first segment of today's daily dose of market insight. So now let us move on to the second segment, which is the intraday technical outlook on those broad-based cross asset classes. So with that, let me expand my screen so that you guys could have a better view of the charts. All right. So now let us start with the FX market over here. All right. Okay. So let's start with the euro dollar. So the euro dollars, yesterday we continues to have our bullish trend bias. Price action indeed shaped that bullish reversal right exactly at the retest at that pivotal support zone that we highlighted yesterday, right exactly at this nice beautiful V-shaped recovery as intended, 1.1375/1.1345. So what I could see is that it hit the first resistance level before trading sideways throughout the US session at the 1490 level over here. Okay, so let me push it up over here. Right. Okay, so there's a near-term resistance at the 11435 level, 11435. So maybe let me put it in writing. 114 1.1435. Okay, so today there will be also a risk event that is pretty much impacted directly that could directly impact the euro dollar, which is the ECB monetary policy decision. So later I'll share with you what time will it be in my third segment of the daily dose. Yeah. So, but nevertheless, in terms of a short-term intraday technical analysis perspective, there is still no signs of a so-called bearish reversal yet. That could potentially take shape on the euro dollar after that strong minor bullish reversal right exactly at our short-term pivotal support that we have yesterday at 11375/11345. And what's interesting over here is that the hourly RSI has managed to stage a bullish breakout from that previous series of lower high, where it previously exited from the overbought level with this bearish divergence. Still recall on Monday where we expect a pullback on Tuesday, pullback takes shape, bullish reversal, bullish breakout on the hourly RSI, and right now it's testing at its parallel pullback support level right above the 50 level mark. All right, so still positive observation on the hourly RSI that could potentially supports a further potential uplift on the euro dollar for today. So I'll be watching the 1.1375/11345 short-term pivotal support on the euro dollar. to maintain my intraday trend bullish bias. Next resistance level to watch will be 114.80. Above it may see 115.65, which is the one-time Fibo extension of this ongoing bullish impulsive up move since the low of 13th of May, and also confluence with the minor swing high area of 21st of April. Only a sudden bearish reversal or a bearish breakdown and hourly close below 113.45 that would invalidate today's intraday trend bullish bias to transform into a minor corrective pullback, exposing or retesting again the 20-day moving average parallel with the next graphical near-term support level at 113 figure slash 1.1270. If 1.1270 can't hold, the minor corrective pullback may deepen further on the downside towards 1.1220, which correspond to the rising 50-day moving average. Next up, the sterling dollar. So the sterling dollar also rallied as expected and hit our first resistance level at 135.55 before trading sideways entirely in the US session over here. So with that, I would actually now tighten my short-term pivotal support level to 134.80 and maintain that intraday trend bullish bias. All right. So let me put it in writing. Okay, 135.80. So that was yesterday's minor swing high, 135.80, before it goes into a tight sideways pullback range consolidation during the US session over here. And what's interesting right now, it managed to actually find some form of bounce exactly at this former minor trend line resistance from the linking the high of 26th of May and 3rd of June, and finally it did a bullish breakout yesterday, okay, before during the US at the start of the first hour of the US session. And what's interesting is that the hourly RSI continues to print a series of higher low right above the 50 level mark, and the RSI hasn't hit the overbought level yet on the hourly basis, indicating that short-term intraday bullish momentum still remains intact on the sterling dollar that could potentially support a series of higher high today. So no change, still maintaining our intraday trend bullish bias on the sterling dollar with adjusted tightened short-term pivotal support at 134.80. Next resistance level to watch after the minor swing high of the US session of the start of yesterday's US session, which is 135.80. It will be at 136.40, followed by 136.90 next. Only an hourly close and a bearish breakdown below 134.80 would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence, exposing 1.3420, which is correspond very closely to the rising 20-day moving average. If 134.20 can't hold, the minor corrective pullback may deepen further towards the downside to expose the next near-term support level at 133.70. Right, so that's for the sterling dollar, still maintaining our intraday trend bullish bias with a tightened short-term pivotal support level for today at 134.80. Onwards next will be the Aussie dollar. So finally, the Aussie dollar managed to inch up higher and hit our first resistance level at 65 figure, which was this Monday minor swing high before it staged that minor pullback. But this minor pullback managed to help exactly at our pivotal support yesterday. We also confluenced with the 200-day moving average at 64.55. So since it hasn't done a proper bullish breakout above the 65 figure level, I do not want to tighten my short-term pivotal support to be so tight. So right now, the hourly RSI has just exited from the overbought level, and there could be a minor pullback over here in the start of the European session at 64.73, which is this minor congestion area that was formed during the Asia session yesterday. All right. So first support level to watch for this potential looming pullback that could take shape during the European session at 64.70, maximum 64.55. That is our short-term pivotal support that we have that remains intact for today. So as long as this 64.55 short-term pivotal support holds on the Aussie dollar, we'll still maintain our intraday trend bullish bias within a medium-term sideways range configuration that is in place since the low of 24th of April. above 65 figure level may expose the next intermediate resistance at 65.37 slash 65.45. Next, only a hourly close and a bearish breakdown below 64.55 that would invalidate today's intraday bullish bias to see the Aussie dollar potentially drifting down towards the lower limit of this medium-term sideways range configuration. The next near-term support level to watch will be at 64.07, which is the minor swing low of 29th of May and 30th of May. Below 64.07 may expose 63.65 slash 63.50, which is the lower limit of this sideways range, medium-term sideways range configuration, and also correspond to the rising 50-day moving average as well. Lastly will be the dollar yen. So the dollar yen plummeted down as expected and almost retest the swing low area of 3rd of June and 26th of May, which is at 142.35 level. So previously we do expect this will be the inflection zone on Tuesday after the corrective rebound, and price action reacted exactly as it tended to be. All right, so with that bearish reaction that has taken shape on the dollar yen yesterday, RSI continues to shape a bearish momentum condition. Price action still hasn't hit the oversold region yet, and it continues to print a series of series of lower high over here. And all right, so with that, I would actually still maintain our trend bearish bias on the intraday basis for the dollar yen, but with a tightened short-term pivotal support downwards, pivotal resistance downwards, pardon me, with a tightened downward pivotal resistance now at 143.75, which is the congestion area of 4th of June, broken down on the over here. And after that, once it break down, there was a retest on it on 4th of June as well during the start of which yesterday's US session, at the start of US session, and thereafter it all the way it did that intraday sell off entirely during the US session, and right now it's trying to actually consolidate. So with a first resistance at 143.12. So I don't want to put it so tight at 143.12 because this is indeed a very key psychological area here. 143.75 previously was supported on Wednesday at the start of the Asia session. Then thereafter, this support can't hold, break down at the 8 p.m. mark yesterday, uh, before the start of the US session. Then thereafter, it did a retest at 9 p.m. mark Singapore time yesterday before that sell-off took shape in the US session until it pauses at around this 1 a.m. mark, all right, 1 a.m. mark Singapore time. All right, so 143.75 tightened short-term pivotal resistance on the dollar yen, still maintain our intraday trend bearish bias. Below 142.35 exposes 141.65, followed by 141 figure slash 140.90, which is the congestion area, minor congestion area of 21st of April to 22nd of April, and pretty much close to the lower limit of this minor descending channel that I drew from the minor swing high of 13th of May. Only a sudden push up and a bullish breakout and an hourly close above 143.75 that would negate today's intraday trend bearish bias to kickstart another round of a corrective rebound sequence, revisiting 144.25 followed by 144.80, which is the medium, which is the 20-day and the 50-day moving average, and as well as the upper limit of this minor descending channel. So if price action managed to rebound above 143.75, I'll be watching out for any bearish reversal candlestick between 142.25 and 144.80 to actually reinstate my bearish bias if price action to actually hover up towards this 144.25 slash 144.80 resistance zone. So meanwhile, I'll be using a tightened short-term pivotal resistance for today at 143.75 to maintain my intraday trend bearish bias on the dollar yen. All right, next up will be the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index. All right, so the Hang Seng Index push up as intended, almost hit our resistance level at 23,970 slash 24,040. RSI now at the overbought level. All right, but there is no bearish divergence. Price action of the RSI continues to shape a series of higher high in line with the raw price action on the Hong Kong 33. Right, so this is what I mean. Oops, sorry. Okay, so price action on the hourly RSI higher high in line with the raw price action on the Hong Kong 33. But however, given that it's now has already exited from the overbought zone over here on the hourly RSI, there could be some form of a minor pullback taking shape in the first half of the Asia session. So pullback support level to watch over here will be at the zone of 23,690 / 23,500. So I'll be using a tighten short-term pivotal support level to maintain this potential minor pullback, 23,500 maximum. So that will be my short-term pivotal support for today. And potentially after this pullback ended, there could be another leg of another potential bullish upleg to be formed on the Hong Kong 33. So still maintaining my intraday trend bullish bias, but nevertheless there could be a minor pullback taking shape first before a potential uplegs materialize. 23,500 short-term pivotal support level to maintain my trend bullish bias. Above 24,040 sees the next intermediate resistance coming in at 24,490, which is the 0.382 Fibo extension of this ongoing short-term uptrend phase that is in place since the 9th of April low, and also close to the upper limit of this minor a medium-term ascending channel that I drew from the low of 16th of April, and also this congestion area here of 7th of March and 18th of March. However, if price action starts to shape breakdown with hourly close below 23,500, then that minor pullback may transform into a deeper multi-day corrective pullback, exposing 23,330, and below it sees 23,070 next. So that's for the Hong Kong 33. Next up, the Japan 225 representing the Nikkei 225. So it continues to trade in a sideways range, still cut between the 20-day moving average and the 200-day moving average at 37,980. So I'll be now right now is actually playing around the first support level that we highlighted, which is 37,550. So still no change, using the 37,270 to maintain my intraday trend bullish bias for a potential bullish breakout. So breakout level or upside trigger level will be at, for sure, will be at the 37,980, which is the 200-day moving average. Clearance above 37,980 may see a minor bullish breakout scenario, revisiting in first step the minor swing high of 29th of May at 38,460. Only a bearish breakdown and hourly close below 37,270 will negate our intraday bullish bias for that potential minor bullish breakout scenario to get invalidated, as well for price action on the Japan 225 to shape a minor corrective decline sequence, exposing the next support level at 36,930. A breakdown below it may revisit the 23rd of May minor swing low area at 36,450, which is so slightly above the 50-day moving average. Next up will be the Germany 30 representing the German DAX. So the Germany 30 and German DAX continue to inch upwards and looking to print a fresh all-time high. So with that, I will be having then the hourly RSI also managed to shape a series of higher low as well. But we could see over here, no signs of a bearish divergence. All right, so indicating that the short-term intraday bullish momentum still remains intact, that support a higher price action on the Germany 30 on the intraday basis. So with it, I will use a Titan short-term pivotal support for today, which is the congestion area of this area here of 3rd of June, and also previously on the 23rd of May, and slightly above, slightly below yesterday's US session low, which is now at this Titan short-term pivotal support will be at 24,080. So as long as this Titan short-term pivotal support holds on the Germany 30 at 24,080, I will still maintain my intraday trend bullish bias on the Germany 30. Next intermediate resistance to watch 24,440/560, which is a Fibo extension clustering level. Above 24,560 may accelerate to expose the next intermediate resistance zone at 24,730/790, which is also being defined by a Fibo extension clustering level as well. However, bearish breakdown and an hourly close below 24,080, that would negate today's intraday trend bullish bias to kickstart a minor corrective decline back to retest the 20-day moving average, and as well as the graphical intermediate support zone over here, which is the gap up support level at 23,820 slash 23,675. All right, now let us now touch on the major US stock indices, starting with the US Wall Street 30 representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average yesterday staged that minor pullback, almost hit our first support level at 42,310. So still pretty much unchanged, right, on the Nasdaq 100 over here. So with that, it seems to us that there is a intermediate resistance that we got to actually be mindful of, which is around this level here. Let me put it. Yes. So is that the 200-day moving average, where the minor pullback actually takes shape yesterday, and also the upper limit of this minor descending trend line that I drew from the high of 20th of May, which is at this 42,580. All right, so let me put it in writing. 42,580. All right, so using the 20-day moving average and as well as the medium term ascending channel support that I drew from the low of 7th of April, which was yesterday's short-term pivotal support level at 42,100. So as long as 42,100 short-term pivotal support holds, we'll still maintain our intraday trend bullish bias on the US Wall Street 30, except that for today, I will have a potential upside trigger level, which is 42,580, which I explained to you earlier. Why is it important near-term resistance? Above this upside trigger level will allow the boost to gain more traction to expose the next intermediate resistance level at 42,870 slash 43,085. Only a bearish breakdown and an hourly close below 42,100 will invalidate today's intraday trend bullish bias to kickstart another round of choppy corrective decline sequence. In first step, revisiting the minor swing low area of 30th of May and 2nd of June at 41,850. A breakdown below 41,850 may see a deeper pullback towards 41,530. All right, so that's for the US Wall Street 30. Lastly will be the Nasdaq 100. So the Nasdaq 100 rallied as expected, and during the last few hours of yesterday US session, it still can't break above the 21,750 level over here. So the hourly RSI now has starts to exit from the overbought region itself. So there could be potentially some form of minor pullback taking shape during the European session. So first minor pullback support level to watch will be 21,500 level. So I will still be using this 21,330 as my type. Still maintain that short-term pivotal support remains unchanged unless during the start of the US session we're able to have an hourly close above 21,750, that I could tighten the short-term pivotal support to 21,500. So for now, I'm still using 21,330, maintaining our short-term pivotal support from yesterday, still maintaining my intraday trend bullish bias for the Nasdaq 100. Above 21,750, may see the next resistance coming in at 22,050, which is a Fibo extension class, a 1.382 Fibo extension from the low of 30th of May, and also confluencing with this minor congestion area here from 21st of February. However, if price action starts to break down below 21,330, that would negate today's intraday trend bullish bias to kickstart a minor corrective decline sequence to retest the 20-day moving average, which is confluencing very closely to the next near-term support zone at 21,180 slash 21,015. All right, so that sum up the intraday technical outlook on the major stock indices. Let us now focus our attention to the commodities market over here, starting with gold XAU slash USD. So gold XAU slash USD managed to actually stage that rebound over here. So there's this nice bullish reversal bounce off the 3,300 level. And also, if you look at the hourly RSI, it has started to shape a higher low as well over here. And today's higher low is above the 50 level mark. So with that, there is indication that short-term bullish momentum has started to resurface in gold XAU/USD as depicted by the positive observation on the hourly RSI that has described earlier. So with that, I will tighten today's short-term pivotal support level to 3,328, which is pretty much close to the Tuesday minor swing low area of the 3,330 level. So as long as 3,328 holds, we will still maintain our intraday trend bullish bias for gold XAU/USD. Next resistance level to watch 3417/3435. Above 3435 may re-expose the current all-time high zone at 3490/3500 level. Okay, 3500 level, which is the one-time Fibo extension of this ongoing minor impulsive uptrend phase that is in place since the low of 15th of May. Only a bearish breakdown and hourly close below 33.28 will negate today's intraday trend bullish bias to kickstart another choppy corrective decline sequence to retest the 20-day moving average at 32.95. We also confluence with the minor pullback support level, previously the minor bullish flag resistance that was previously in place from 24th of May, now turns into a pullback support level that confluence with the 20-day moving average at 32.95. All right, so still maintaining our intraday trend bullish bias with adjusted upward short-term pivotal support for gold XAU/USD at 33.28. Lastly will be the West Texas oil. So still recall that the West Texas oil still hover below its medium-term symmetrical triangle range resistance, symmetrical triangle range configuration, and it tested the symmetrical triangle range resistance since Monday. And what you could see is that price action can't break above it, which is indeed a pivotal resistance level at 64.06 now, and hit our first support level at 62.74 before it traded sideways. Hourly RSI continues to remain bearish as it shaped a series of lower high and a bearish divergence. And if you were to draw this support level over here, it managed to break the support level as well and has yet hit the oversold region. All right, so indicating that the momentum has indeed turned bearish, or more latest observation is supporting this ongoing bearish momentum on the hourly RSI as depicted by the bearish condition that is being flashed out on the hourly RSI also. So that should potentially support a further potential downward drift towards the middle part of this symmetrical range configuration in the medium term that is still intact on West Texas crude oil since the low of 9th of April. So for sure, 64.06 will still be my short-term pivotal resistance for West Texas oil, still maintaining that intraday bearish bias within this medium-term symmetrical triangle range configuration for potentially West Texas oil to drift down the middle part of this medium-term symmetrical triangle range below 62.75 may expose 61.85 next. A breakdown below 61.85 may revisit last Friday minor swing low at 60.35. Only a push up and hourly close above 64.06 will invalidate the trend, the bearish bias for today to see a squeeze up to retest 65.40, which is the next intermediate resistance level to watch, which is the swing high of 23rd of April. All right, so that sum up today's intraday technical outlook on these broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So the key data to look out for today will be centered on the European session over here. So at 8:15 p.m., we will have the ECB interest rate or ECB monetary policy decision, where market participant is expecting another cut to the depo rate to 25 basis point to 2%. So that has already been priced into the market. The market really expecting a cut over here. So what market is looking up right now is after the interest rate cut at 8:45 p.m., which is the ECB press conference by ECB President Lagarde. So market participants will be hearing very close attention to the Q&A, whether ECB will be continue to be as dovish, because do not forget that the inflationary trend of ECB has really as inched down below ECB target, the headline number which I explained to you yesterday. So if ECB does not sound, or ECB President Lagarde during her press conference does not sound as dovish as she as market wants her to be, that could potentially support the euro dollar on the further potential technical analysis bullish trend trajectory. All right, so that's 8:45 p.m. Singapore time. Then thereafter will be a much more of a quiet US session. There's no US data to actually take note of over here, except that at 12 a.m. Singapore time, early Friday, we have Fed Kugler's speech over here, and 1:30 a.m. Fed Harker speech. And also on Friday at 7:30 a.m. before the start of our daily dose, we have Japan household spending. So that's considered as retail sales for Japan indirectly. So market is expecting a weak number of 1.4% from the previous month of March of 2.1% over here. All right, so that's sum up today's daily dose of market insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.